If you've ever used a Bollinger Band, if you've ever used a MACD, if you've ever used an Ichimoku cloud, if you've ever used a fucking VWAP, volume weighted average price, those are all based on the same concept of mean reversion. They all calculate differently, but they're all based around the idea of finding some midpoint, some mean, right? Some usually a moving average. It doesn't have to be an MA or an EMA. It can be like a VWAP that looks like a moving average, a line going across the screen, right? That represents the middle point. And then the deviations beyond that, if it goes too high or too low, that's when it indicates the overbought or oversold conditions. The RSI is the same thing, right? The RSI is also based around mean reversion. What happens when you have a bullish divergence where the RSI goes way, way down and then it stops going down, but price keeps going down and the RSI starts to go up, right? You have a higher low on the RSI below 30 and back above 30, and you have price going down. That's a bull div, bullish divergence. What is the expectation? The expectation is the price goes in the opposite direction, that it doesn't go down anymore and it goes up. That is reverting to the mean. The RSI will revert, it will move back towards the midpoint, 50. And even if you do any kind of advanced statistical analysis, if you use Z scores or Z scores, depending on where you're from, in any quant strategies, right? Z scores are all about standard deviations. It's all about how far is something deviated from some type of mean. If you've ever seen the bell curve meme, maybe to describe stupid people or average IQ, or to describe some real concept in markets, right? A Gaussian distribution. Again, same concept. It's all about any distribution will form some kind of curve, right? It won't always be a perfect bell curve. It'll look different. But the idea is that there is, again, a mean, and the majority, generally, the majority of outcomes will fall within that, and then the further you go to either end, the tails, the fewer things happen. So if you take that back to pivots, if you're taking your pivot point as the middle, most price action should happen around the pivot, and then maybe at the S1 and the R1. And if you're taking that pivot and that pivot is valid and relevant, then less and less price action should take place at S2 or S3 or R2 or R3. If the pivot's valid, if your levels are marked correctly and price is in that phase, it should not go to the S3 and stay there. Otherwise, it's probably not your pivot. Okay? So that's just to get an idea of what we're doing here, why we're having this, what the whole concept of the pivots represents. And so that's the concept behind it. Now let's look at it on a chart. And then I'll show you just how to use the pivot tool on TradingView, and then I'll show you what I use the same term pivots for in my own trading. So you can go to TradingView and just type in pivot, and it will be pivot points standard, right? It's a TradingView built-in indicator. It is available for everyone, free, whatever. If you've got a TradingView subscription, you can use it. Okay, pivot points standard. I think I already have it on my chart here anyway. And then you can turn it on. Now, when you first load it up, it's going to have up to 5 of these, S4, S5. Again, because I base it off and I view it the same way as any other type of distribution, to even get as far as S3 is a less than 1% probability. So I think it's better to just stick with your pivot, your S1, your S2, your S3 to begin with. Okay. Now, how you want to use it is, it depends on your style. You can choose the time frame for the pivots, and then you can choose the look back, right? So this is currently set to a monthly, and I've just set it to 1 month. So what does this mean? What are these lines? Why are they here? This is taking September's high, low, and close, and then calculating the pivot levels using the formula I mentioned before off of those, right? So September, as you can see, started over here, right? And there was September's open, right? And then September closed here, right? And so we can drag all the way up to the highest point of September and all the way down to the lowest point. The lowest wick was there on the 11th. The highest wick was there on the 19th. Okay, and September's close came in on the 30th at around 26,966 on this exchange. So this is the price action that these levels are based off. And then it projects it onto October. Right? That's the idea. Why? Because what do traders do? Like we said, whether it's on daily, weekly, monthly, or whatever, traders will come in on the 1st of October and say, right, what happened in September? Right, let me get my bearings. If I want to get an idea of what might happen in October 2023, where should I start looking? If I trade, maybe I'm a swing trader who trades over multiple days or a couple of weeks. Well, I'm not going to go and look at August 2021 and say, oh, there's August's high, August's low, and August midpoint. No. You'll start with the most recent. Whether that's right or wrong doesn't matter. All that matters is that's what traders do. So it will then map these out. So your pivot is there at 26,449. Right, then your R1, R2, R3. And you can see, all right, cool. What happened? So it opened above the pivot, right? It pushed up to the R1 and it found resistance. Now there's a big wick above it at this point, but no daily closes above the R1 for the first 8 days of October. Does that mean that these pivots are magic? No. Does it mean that they have some validity? Well, it would seem like they do. No. It doesn't necessarily mean that it was just the pivots. There could be other indicators as well, just standard VWAP or moving averages or Bollinger Bands, which all, have the same kind of concept. That meant that at the beginning of the month, when price is trying to figure itself out, it's not going to deviate too far above or too far below the level, because it's usually going to start off with some kind of consolidation or ranging, right? So if you're looking at it on a monthly perspective, you could add the monthly, put the pivots on, and then at the start of your month, just say, all right, first thing I'm going to watch is how does price react at R1 or S1? Yeah? And then if it goes to R1 and then it comes back to the pivot, what happens? So this is a really good example of this month where we had a really strong trend month, a very strong uptrend. Now, what does that mean? Well, that just means that price has gone into one of these phases that it doesn't do often. So the vast majority of the time, price does not do this. 85% of the time, price does not trend hard. It actually consolidates or ranges or goes sideways or some form of that. So this time, it pushed towards the R1, back to the middle, back to the pivot, and then just started ripping up. And it didn't respect them necessarily on the way up, right? Wicked through it, didn't touch it, and then blasted through. So does that mean pivots don't work? No. In fact, this is one of the rare occurrences where pivots will not work. So the month started off like most months do, with no clear trend. But when price goes into a strong trend, just like any of your other mean reversion tactics, they will break in a trend. Because mean reversion doesn't come until after the trend. Because again, if we go back, what does the RSI measure? It measures overbought and oversold. What does the VWAP measure? It measures the deviation from a volume weighted average price. What is a moving average? That is literally a smoothed out moving average of price, right? And if price goes too far above or too far below one of those levels, eventually it will reverse and go back towards the MA, to the VWAP, to the midpoint of the RSI, whatever. But for that to happen, it has to deviate first. It has to go overextended. And we're in one of these phases. So you can also go on a look back, and I can go, I'll put 3 months on, right? So we'll look at the previous months before that. Now, what you'll notice right away is this is September's, and that was because September had we had a very narrow range in September. I'm sure you all felt that pain of just sitting where it was doing fucking nothing. The previous month, though, we had a much wider range, right? So from August the 1st, here, right, all the way up to the high of August, and then all the way down to the low of August, which was actually over there. Low in 22nd, the high in the 8th, right? So August's range was almost double that of September. Much more volatility in August. What does that mean? That means the pivot levels in August produced wider ranges in September, right? So that's, again, completely logical, because when you go and look at the calculation, it's calculated based off the high, the low, and the close. So the greater distance there is between the high and the low, the wider the pivot levels are going to be the following month. So did price respect them in September, right? So remember, August has happened over here, and we'll delete September's shading, but we're looking at August shading, and then we're looking at September and how price reacted. So the pivot is here. So August finished with a dump. It started off in September, trading between the P and the S1. It then moved up to the pivot level, found resistance on it, couldn't get above the pivot level. Moved up again, right? Couldn't get above it. So it spent all of September trading below the pivot level of August. And it wasn't until October that we actually broke above that original level, right? So does that mean anything? Again, it's like everything in the market. Everything is a tool. It is about how you use the tool. So the way you'll know whether the pivots are good or bad or indifferent is to test them. Take this, pick it apart, and go and back test it. Try different things. Think about it. Think about what happens when price goes to the R2 within 7 days of the next month. Yeah, that's probably quite a rare occurrence, right? If you imagine, like, let's go back again here, where we have July's range, which was then printed in August. So July opened here. July went up as high as, there's July the 1st. July went up as high as there. And July closed, that was August. So this was July's lowest point. So July's range was narrower than August's, but wider than September's, as we can see. And so here's July's range, and then here's July's pivots. And so we opened up July, and again, in August, we opened up August, I should say. In August, price moved up to the pivot, to the P. Resistance, resistance, right? Couldn't get above the P. Then, in mid-August, it flushed all the way down through S1 and through S2, and didn't reach S3. And then it reverted back towards S1, right? So, what does that mean? Does it necessarily mean anything? I don't know. I just pulled this up randomly. It doesn't have to mean anything. Nothing has to mean anything in the market. But if you test something 50 or 100 times, you will start to notice a pattern of behavior in certain areas. And that's what trading is. Trading is not buy my fucking indicator or buy my signals. That's just bullshit. Trading is a journey of self-discovery for you to take the pivots or whatever you want to do and figure out how you can gain a small edge that you can then repeat over time and hopefully make money. So if you're a new trader and you've watched the other lesson on support and resistance, and you don't quite understand, maybe it doesn't quite make sense to you why you would draw a monthly support at the monthly close, or a monthly resistance at the monthly close, or a weekly support at the weekly close, or whatever, right? Maybe that's not, it just doesn't sit well with you. Then maybe look into pivots, right? If you're mathematically minded, this must have you jumping out of your seat with joy, because it makes total sense. We're going to take a previous period of price action, and we're going to use the most important data points, the high, the low, and the close, and we're going to map out levels from it. Yeah. So you can take those levels, look at them, and find them and see where are they respected, or conversely, not respected. So that's the dictionary definition of pivots. That's what pivots are. Right now, I'm going to throw all that out the window and tell you what I use pivots for. I use the same term just because, to me, pivot, at least how I conceptualize it, is a potential turning point, right? Or a potential area for price to react strongly. So that might be a reversal. It might be a sharp expansion. And so this is totally separate to the previous lesson on the actual pivots. That's how you use pivot points if you want to do it by the definition of what they are. The way I use them, and the way you'll probably see me using them if you read trading analysis or watch my daily levels or watch any of my videos, is that I am trying to find key levels where price has respected in the past and, more importantly, produced large impulses. Okay, so the key difference for me with support resistance and a pivot, like a pivotal level for me, is the addition of an impulse. So the most clear one that I've had probably all year is this 28,500 574. Now, when you talk about that, every exchange is going to be slightly different. So you can just say 28,600, right? You could say 28,500. You don't have to over stress about it. But why does this level matter? Well, we'll start off on the higher time frame. So I would start with a weekly. And what I want to do, and what I do at all times, is I will look at the most recent price action. So let's go back in time a little bit. Let's go on replay mode. And let's just watch it as if it were happening in real time. So there were no pivots, right? Let's imagine there's no pivot level. There's no pivotal point. There's no area where I wanted to take interest in the market beforehand. Then I watch as price moves. And I see price go to a certain level, okay? It does something significant. What would that significant thing be? Well, here it is, right? Price went up above. Let me get one more candle. Right, there we go. Price came up on a weekly chart to this previous high, swept it out with a deviation, swing failure, whatever you want to call it, pushed above, false breakout, back below and closed. So now I'm looking at this level and I put a horizontal line on it. Now, at the moment, this is just a horizontal line, right? It doesn't have to mean anything at all. And so I wouldn't mark this as a pivot yet, but what I would do then is go to my high time frame, my weekly, and go and see, very simply, does price respect this level? Right, so first thing I look at is how many taps have there been? And so here, you can see it tapped as support on a weekly. You can see here that it stopped the impulse move back in March. It stopped this pump. And again, you might say, well, it's like $2 or $3 below. Don't stress about that. It's not about the exact dollar figure. You can be within, if it's on Bitcoin, you could be within a couple $100 range of this, and it's completely valid. So it stopped the move here, and then for 3 weeks, couldn't get above it. Could not get a weekly close above this level for 1, 2, 3 weeks with wicks, and a 4th week where it stopped. That's significant to me, right? Then we go above it. Okay, cool. It's not supposed to be a level that holds forever. It's not always resistance or always support. But does price respect it? Yes. So 4 instances there. 1 instance here on a weekly. I go back further. We look at this. Okay, cool. So we had a crazy wick with the Luna collapse in 2022, where price then closed above it. And more importantly, whenever the market settled down, when it wasn't being driven by mass liquidations, which can cause crazy wicks, it came back down and respected this level again. And the following week, right? So there's 2 more examples on a weekly. We look over here. It was the absolute bottom in June of 2021. And then we go back to 2021 in January. And after the big breakout, right? With the big breakout and before the final upthrust, we had a wick down into it. And then after the sell-off, after the top, it held as the bottom, which then propelled us all the way to the top of the bull market on the first push. So there, on a weekly, I have now got an area of interest for me to be a potential pivot. Several times this is acted as either support or resistance, very clearly, okay? Then I would go to my next time frame down, which for me is my daily. You can do whatever you want, right? And then I would get more granular with it. I would say, right, is there anything else I can ascertain from this? What can I gather from this? Well, I can see here, obviously, my original point that I was looking at. We have this previous one. Also got this wick in here on the daily. Nothing super strong over there. You can see here it did flip. There we have 1, 2, 3, 4, 5, 6 daily wicks above, right? You notice that we had